I always kick it off with the stock of the day, something that's in the news. Thought we'd take a look at Allkem after it provided an interim update on its Argentinian lithium project. It's now expecting lithium carbonate production capacity, its Buenos Aires mine, to be up by 40%, which is about 10% higher than its last estimate. Shares creeping into the green this morning, sitting around record highs on a day when lots of stocks are up. So what do our experts think of Allkem? It's in certainly a very hot area at the moment, anything to do with lithium. Scott, what do you think of it? Has lithium run too hard as a sector first up, and then just hone in on Allkem?
Koshi, I think it's very hard to actually separate those two questions, quite honestly, because the answer to the former is yes. Yeah. And when you have a sense of a commodity getting out of what I'll say out of control, Chris may have a different view, and that'll make my life more fun. But when you got a commodity that runs what I think is too hot and takes everything with it, you almost can't say, but what about the company? Because we know that as a commodity producer, you can control your costs, you can control your operations, you can't control the price. And so whatever investors are thinking about the company, the commodity is going to dwarf it. It reminds me, and I don't want to draw a direct linkage here, but when the cannabis stocks were hot a couple of years ago, it didn't matter who you were or what you were doing, your share price went through the roof. And then, of course, as soon as cannabis comes off, there's nowhere to go, there's nowhere to hide, because all that expectation, all that hot air goes away pretty quickly. Now, lithium is not cannabis for a whole lot of different reasons. Firstly, I wouldn't smoke it, but secondly, more importantly, it is a real product with real, legislated use. There is an absolute use case for it. The challenge for investors right now is they're doing the quick two-step, which is more EVs, more batteries, therefore more lithium, therefore lithium companies are going to make a fortune. And that's a pretty easy straight line. The problem is, as we know, and as I've said before on the program, the oil price went up about 2 or 2.5 fold over the 20th century and early into the 21st century, despite the fact the volume going up by literally millions of times in terms of yearly production. And you think about, hang on, if volume goes up that quickly, but price hardly goes up after inflation, this is, by more than 2.5 times, it tells you what exactly happens when it comes to commodities, which is as soon as something gets hot and stays hot, plenty of other people come and join the party. Now, if you're a short-term trader, if you're a medium-term trader, and you can kind of work out or guesstimate where the right point to get in is and the right point to get out, because you're going to get out while the bulls are running and before more supply comes on, there might be some money to be made, quite honestly. I don't claim to know. But if you're a long-term investor, you're looking at the history of literally almost every commodity. While ever there's more to be found, while ever economies of scale make that exploration and the actual mining process more cheap more inexpensive on a per unit, whether that's ounces, tons, kilograms, depends on what commodity you're looking at, that remains the story. Oil has become much, much, much harder to find since the peak oil thesis of the 1970s, and yet the sheer volume of it and the improvements of technology has meant the oil price itself over any length of time hasn't moved that materially. Now, of course, there are daily, weekly, monthly, even yearly volatility. But if you look through that and look to the long term, there's not much there. So if you look at Allkem, yes, lithium is going to be massive. We're going to have many, many, many more lithium batteries in 10 years' time than we do today. I think we're going to have a lot more in the way of usage, EVs in particular, but even things like, for example, power storage. When we think about replacing carbon-intensive grids, it'll be absolutely in demand. Do I think, though, that there won't be a time when the price falls? No, I think the price will fall in all likelihood, not a certainty. I wouldn't bet against it, but I absolutely would not bet on it.
Okay, but it's producing rather than exploring. That puts it a bit further along the curve, do you reckon?
Kind of, yeah. So yes, absolutely. In terms of risk, at least they've got a commodity, they've found something, they're producing it. Those things, absolutely. The problem is let's say the price falls by, I'm going to pick a number here. It's not a forecast. Let's say it falls by 2/3. Let's just pick a number. In that environment, no matter who you are, no matter what your costs are, no matter how much volume you put out, it's almost inevitable that your share price falls. Now, maybe I'm wrong. Maybe this is the base for lithium. Maybe it never goes lower than this. Maybe volume continues to rise and these guys make a fortune. Is it possible? Absolutely. There's always the exception that proves the rule. But is it enough? I don't think so, mate, because even if they do continue to produce, the expectation the market has for price and profitability, I think is just way too overheated.
Okay. Chris, well, what do you think? I saw, talking about the renewable and battery storage and things like that, I saw a great graph out of the Financial Times, which for the first time ever in 2021, there was more electricity produced from renewables than coal. which just shows you the traction of, wind and solar and all that sort of stuff.
Yeah, absolutely, Koshi, and that's a big part of the reason why we've seen lithium prices and everything in that space to do with battery technology and the like really flying and people piling into it. Scott has really laid out beautifully the arguments, and I tend to agree with him for the most part. I will declare that we hold Allkem, but very specifically hold it as a trade. And even as I hold it as a trade right now, I'm asking myself the same questions about whether or not this is sustainable and whether or not prices can keep running. Now, Allkem in particular has just had a series of fantastic announcements. So they upgraded their price expectations, and they also upgraded their production expectations for both of their assets at Olaroz and the one that you were talking about there in Buenos Aires. So they've just had this great news flow, and the share price has gone crazy. And let's not forget that it was only about a month ago it was trading at $10. Now it's trading at 14. So that is a huge move, or close to 14, or I think it was 14.20 today. But just pivoting back to that broader argument. So the thing right now is the expectation of demand for lithium is probably the highest it will ever be. But there is no shortage of lithium in the world. It's just a shortage of production. And like Scott said, that production will come in line because there'll be that many people out there incentivized by the prices they think they can achieve, that you'll find more and more lithium production will come online more quickly than expected. And that supply and demand equation will balance out again, as Scott was talking about. So bottom line, I hold it as a trade right now. I'm probably looking at taking profits, and I agree with Scott in the long term that equilibrium will be found at some point. Prices can't remain this elevated for that long. There is no shortage of lithium in the world, just a shortage of production.
Okay, so take some profits, and it's a trading stock rather than a long-term investment stock.